All right, new Bitcoin miner capitulation hits at sub 100K. Yeah, the big, oops, that's the wrong button there. The miners are, the hash rate's way up. So, I mean, that's generally a good sign. I don't see Bitcoin capitulation though. Let's see, major long-term Bitcoin price rebound. Rebound, yeah, sub. Oh, is the bottom. I missed the bottom. Miner capitulation. Yeah, we saw a bunch of miners selling out recently. And look, I think 84K is still on the table, you guys. But Bitcoin classic local bottom signs. We should look at the hash ribbon indicator and see, and because usually it turns blue after the miners capitulate, so that could be another clue. And let's see, Bitcoin miner spotlight. I think we're going down the rabbit hole here. How are we doing on time? Hash ribbon indicates the worst of the minor capitulations over. When the 30-day MA, we have a nice indicator that just shows a blue dot, so that's all we need to do. And the last capitulation phase occurred mid-October. What happened right after that? October was a huge kind of bull rally that came out of that, both in 2023 and in 2024. So, and this says so that triggered Bitcoin pushing up from 73.8 to 108 2 months later. Okay, so it does seem like the winds of change are behind us, but we still have some headwinds. Yeah, a lot can happen before the next Bitcoin buy signal. So we have Capriel Investments, they're reputable, most sell-side risks, and ACE3AC collapse. Wait a minute, what? Different article. Three Arrows Capital was, of course, a huge fund that collapsed. I'm going to open that up. We do want to be aware of anything that could blindside us. Bitcoin miners, once again, growing their stack. I think we've covered that and covered that. Okay. Let's take a look at this. Sell-side risk since Three Arrows Capital collapse. 5 things to know in Bitcoin this week. The tariff sell-offs, more price action clings. It's okay. Let's see. I'm going to skim this, you guys, so we can get to the good stuff. CPI here again this week. Lots going to happen this week with these economic numbers, you guys. So we'll have to see and play it kind of safe. And let's see. Very thin order books. So low volume, and thin is not a lot of buyers and sellers on each side. The breadth is low, so that means it's set to could go either way fairly easily with any high movement, high volume coming in. And let's see, slow moves for so like see some more volatility due to Wednesday's ZPI, and then see the real move the week after that event. So it's looking more like next week we will see more of the markets tipping their hand, but there's as with often there are kind of conflicting signals on the charts. So I then want to go over to the charts as soon as possible. Let's see, Kabotsi letter, worrisome phenomenon playing out. So let's see, Kabotsi letter is good. Eyeing developments at the Fed, however, trading resource Kabotsi letter noticed a worrisome phenomenon playing out. The U.S. reverse repo facility has dropped to its lowest level since 2021. True, a sign that restrictive financial policy in the form of so-called quantitative tightening may not last much longer. But we were watching Camel Finance today. He's got some good input on that, and one of the people he quoted in terms of the it's not over. Quantitative tightening isn't over until I'd screenshotted it on my iPad. It is it's an indicator I'm going to start monitoring, but this thing hasn't spiked yet, so QT isn't quite over yet, essentially. So always sharpening the saw, you guys. Sign that restrictive financial policy in the form of QT may not last much longer. Yeah, I think that's true. This all plays into kind of a March being a bigger month higher. And I know, by the way, I originally was like, hey, I think January is going to be a big up month, and February, and then we pull back in March. But we had a bit of a curveball there with all the tariffs and the tariff trade war, et cetera. So timing these things is very difficult unless we're at the extremes, and we've been bleeding out for a long time. The lows I was able to call, the highs I was able to call. It's this midpoint, really tricky, timing that midpoint move, because you have that tug of war at a standstill. Neither side is tired, right? So at the market top, the bulls are tired. At the bottom, the bears are tired from dragging it all the way down. So, and come with a big liquidity shock. So we have to be very aware right now. and this is the reverse repo down here. So, there's definitely some bullish signals that we want to be ready for this thing to move higher in the fairly near term. The question is, everyone's reading the same information, and do we have another drop coming before we start ripping higher? Hey, this is Brett from Moonstream. If you'd like to learn more about our pro trading signals or our live classes every Wednesday or our Retire Rich program, go over to moonstream.io/start.